Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by Finland Academy. So in this week, there was not much activity that we have seen. The market has ended week on week basis just by 0.3% on the positive side. And if you look at the detailed day, how the market has behaved, so you see that this is the 5 previous candles where you see the very small, tiny real bodies and large tails and wicks. So it shows that there is an intraday volatility, but day on day basis, there was no further momentum that we have seen. Yesterday, the market has closed within 1 point. Today, the market is closed within 10, 11 points or so. So 4-5 days, we have seen a very tight consolidation patch. From past 7 trading sessions, the market is in a range or 19,850. That is the resistance that we continue to face, and on the lower side 19,670. So almost a 200-point range from past 7 trading sessions we are spending over there. So this is the after the 5% upside momentum from the recent bottom from the 18,800 level. The 5% upside momentum happened, and this is the time-wise correction or to digest the previous upside momentum. The phase is going on. Underlying tone for the market remains in bullish because our market has taken the support at a very good level, and then it has picked up its momentum. It is trading above all its moving averages, and short-term moving averages especially are sloping on the positive side. So underlying tone for the market remains positive, and a very short-term support level for the market is 19,670, which is in base of this particular week. So as far as market is above this level, this is a bullish zone. But for the bullish continuation sign, we need to see that the closing above the 19,850 is very essential, and once that establishes, we see the further upside momentum to fill this gap, which is around the 20,000, 20,100 level. So this is what in positive momentum broader perspective that we are seeing into it. This week market ended on the positive note by 0.3%, but if you look at the Banknifty, after a long consolidation patch or underperformance, it has started to recover actually right now. So on the week on week basis, market has Banknifty is mildly positive than the Nifty. Nifty was 0.3, it was in 0.42%. So not much difference, but if you look at the technical levels of it, this is a weekly chart. The last time, the couple of weeks back, when the market has made its bottom, so it was a support level. Last time's the resistance level, it has acted as support, and we have seen some sort of upside momentum. But from past 3 weeks, there is not much momentum. And I look at on the daily chart, and on the daily chart, I see the recent this week's bottom. It coincides with some sorts of previous support level. So let's say there are a support level that market has established earlier, so it has made the bottom, and we have seen a certain kind of the upside momentum. Again, to take it with a pinch of salt, it is not a decisive momentum, but a very mild sign that the Bank Nifty has started to improve, and this is what it is making it in short-term bottoms. And once that particular thing establishes and prices moves above this level, then it has an upside potential up to the 44,500 level. So this is an immediate resistance that we see above to that level. Then we can see that Bank Nifty is clear-cut taking the directions. However, if I look at the underneath the Bank Nifty, the heavyweight counter like an HDFCbank. So HDFCbank, if I see, it has started to pick up its momentum. If you have seen the Bank Nifty, it was consolidating at a lower band for past many days. But whereas Bank Nifty, the heavyweight counter, we are seeing that it has started to pick up its momentum slowly and steadily on the higher side. However, it is not having that much kind of strong support level on the weekly chart at a lower side, not that much visible. Long back, these are the basis or intermediate levels that is cutting the line. But after the very strong decline in momentum, it has started to form a base. And the important thing is that couple of weeks back, where there is a very strong red candle has formed. So normally, many of the times it result into the selling climax, and the stock has broken. It's in a high level. So that is in a positive development that I see. So maybe in a previous week, we have seen that mid caps and small cap has outperformed the market heavily, and large cap stocks were underperforming. But now little bit some sorts of a tone is getting changed on the large cap because HDFC mildly it is improving on the high side. If I pay attention to the Reliance, so Reliance also it has formed the good base. So prices has corrected down. So this is what the downward sloping channel 2230 was a good support level. So earlier whatever the resistance level were there, it has taken the support level over here. Prices has broken it's in a base as well. So let's say this is what the immediate hurdle. We normally always emphasize after taking the support, if the stock is breaching the resistance, then it becomes a change in a trend that is happening. So now 2400 level is that there can be the intermediate corrections, but on the lower side 2360 to 2340 level will act as a good support level, and this becomes a buy on dips kind of the opportunity. And once we see that 2400 level is taken out, then the next best level is the 2670 level, which is what the previous peaks that we are able to see. So large cap companies, the heavyweight like an HDFCB and Reliance has started to change their tone from a sideways to negative to now the sideways to the positive side, and once we see the decisive breakout, they will be under the bullish momentum or buy on dips kind of the things is getting established on the both of the stocks. So large cap can find the traction in a coming week. Now looking at in a sector specific, if we pay attention, so after a many days we have seen that Nifty 0.3% up, Bank Nifty is 0.42% up. From the sector wise, the Realty continued to move on the momentum 1.35%. Metal sector is quite volatile. One week they outperform and in another week they underperformed. But the steady and continuous momentum that we are seeing it from the Realty space. Oil and gas from past 1 or 2 weeks they are doing quite well. But yes, here you can see that financial services stocks, auto stocks, they are coming on the positive side. They have doing well. Pharma stock has emerged as a very strong positive momentum from past 1 or 2 weeks. They are doing well, and this is a bottom reversal play. So we continue to expect some sort of positive traction in the pharma space. Now looking at a underperformed stocks, so PSUBANKS in this week also they have continued to decline, and IT stocks again it is in a bullish reversal pattern, but it is taking some sorts of time. There was a very big momentum happened some days back, so it may retrace to it, and then we can see the pull up into the momentum. But let's positive momentum pan out, then we can take a call accordingly. After the many weeks, we have seen that small cap and mid caps has underperformed the market. That is a Nifty 50. Nifty 50 up by 0.3, whereas Nifty next 50 down by 0.55%. Here you small cap 0.3% down. Whereas small cap 50, you see that this is a 0.25% down. Even mid caps also, they were also up by 0.24%. They are up but lesser than the market. So again, there is some sorts of traction into the large cap that we have seen, but it is in the very initial stage. But I will still favor the small cap and mid caps in the current context based on the trading strategy, because they are into the movement right now. If I look at the ratio chart as well, so here is the ratio chart where I see that this is a Nifty divided by Nifty 500. So falling line indicates that this is an underperformance of a Nifty vis-a-vis to Nifty 500. But this recent low is near to my previous bottom points. So let's say 2005, 2018. This is the bottom levels that we are seeing. So kind of support, but so far we haven't seen any of the reversal sign. But this is worth to take into account how the formation is happening, where we are right now as far as the performance and underperformance of the large cap is coming. So it is near to the previous bottoms of 2018 and 2005 around. Now stock specifically, if I talk about, I have seen that there is in one particular theme that is emerging out. Auto sectors, it is doing well, but not all the sub auto sectors are doing well. The major momentum that we have seen so far is under the two-wheelers and three-wheelers. So to some extent, tire sector has also picked up its momentum. But another segment that I have been seeing is the auto ancillaries from the small cap, mid caps category. So to take out a couple of names, and which is the in our Finland Academy, we emphasize a lot on that particular pattern as well. So let's say this is a Subros. So this particular all stocks had the very huge consolidation patches. So let's say 2018 it has consolidation patches, 2023 it has given the breakout, it failed, it came down, but taking the support at an internal level, and now this week it has given the breakout from the falling trend line. So bullish continuation sign over here I am seeing. Let's say there is another stock like a FIEM Industries, again the same case. This is the rations, this is the rations. There's a monthly chart 2016 to 2022, so almost 6 years consolidation patch that we have seen. Prices has gave the breakout, retested, now it is emerging out of this consolidation patch. So let's say if I look at the line chart, so it is taking over in the previous peak, so it is showing the fresh bullish momentum. It is not so far that prices has gave up this material momentum. It is a fresh development that we are seeing in this particular stock. So FIEM, Subros, from the auto ancillary space, we can say you can have an eye on a Bosch as well. So let's say this is a Bosch chart. If I look at the monthly chart, so it has made its top in 2015, and this is what my falling trend line, and this falling trend line this particular month we have seen the breakout happening above that particular level. So this is almost 7 to 8 years falling trend line which is giving the breakout, and along with that this is what my resistance or previous hurdle level. So one time, two time, three time, 4, 5, 6, 7 times it has acted as resistance. Prices give the breakout, retraces back to this particular point, and then we are seeing the fresh momentum in this. So Bosch is a third stock which is giving the momentum. Another stock if I say, that is in a Impal. So this is the another setup. So basically, try to make a point is that auto ancillaries there is a momentum. The fresh momentum is emerging in this. So this also stock has made its high in 2018, and recently it is trying to get a breakout on the high side after the good consolidation patch. The breakout, retest, and follow up sign makes a very important sense. So this will be the theme for a coming time to look at. So whatever the things that we have discussed about the market, sector and stocks, that is for the educational purpose only, and see you in our next video with a new stock setups and a market trajectory to discuss about. Thank you so much. Stay in touch.